Very good afternoon to everyone. First of all, I'd like to thank the organizers for the conference on Indian mining for giving me the opportunity to speak at this platform. Thank you very much, Monica. I am Devanshi. I'm an iron ore analyst at CRU. So today I'll be speaking about the high seaborne iron ore prices in this volatile market, followed by its reasons as to why did we witness such high seaborne prices, and then we'll look about the supply situation as to how it is improving and therefore having an effect on the prices. This is just a legal notice. Okay, so in 2019 Q3, the iron ore market experienced some of the highest price volatility since the 2010-2014 mining boom. After averaging at around $106 per ton in June, the 62% Fe fines continued its upward trend and traded around $120 through the month of July. So if you see in the chart here, then in 2019 and in 2018, there was a wide variation in the prices. Now coming to 2018, the difference between the highest and lowest traded iron ore price was $16. That is, the highest price band was $79 and the lowest price band was $63. But in 29, if you look at this, then this delta of the highest iron ore traded price and the lowest traded price has been $49 per ton. So the main reason for such drastic increase in the iron ore prices are supply disruptions, low inventories, and strong Chinese steel production. Now looking at this as to from where does the seaborne supply come from? So the iron ore supply comes from the state of Para, Minas Gerais, and Western Australia. In 2018, these three regions accounted for approximately 80% of seaborne iron ore. And at the start of 2019, this figure was expected to grow further because all the Australian majors were ramping up production, while Vale was expected to reach approximately 400 million tons of iron ore production this year. However, all these three regions have been hit with significant supply disruptions, and shipments in March 2019 reached to a very low level. To go into details of each of these regions, let us first go to the state of Minas Gerais. As you can see, it's a southern state in Brazil, and it had experienced the tragic Vale Dam accident, which claimed approximately 300 lives, and it resulted in widespread suspensions throughout the state of Minas Gerais. Next is Para, a state in northern Brazil. It was unaffected by the suspensions because of the Vale Dam accident, but this region expected the highest rainfall. The rainfall was highest in a decade, which affected the production, transportation, processing, and shipments of iron ore. The last and the most important region is Western Australia, which comprises approximately 57% of global iron ore. And this region had all kinds of issues. When I say all kinds of issues, then it means accidents, fire, two cyclones. If I have to name them, it's Cyclone Veronica and Cyclone Wallace. And right now, even this region is facing quality issues. So at the very same time, when we were witnessing these supply issues, then, as you can see in the new chart, in 2019 Q2, the Chinese crude metal production was record high, and hence the Chinese iron ore demand rose sharply. Consequently, supply issues with high demand led to strong prices. But the good news is that the supply is recovering. The supply is recovering both from Australia and Brazil, and we'll see those effects on the prices. Rio Tinto is an Australian producer, which has an approximate production of 350 million tons per year. But this region, as I just mentioned, that Australia is having quality issues, this has quality issues at its Brockman 4 mines. As I'll just tell you that Brockman 4 mines is one of the largest individual contributor of the Pilbara blend materials of Rio Tinto. So because of the issues with the quality, this company has slashed its guidance, and which currently stands at 320 to 330 million tons. So consequently, it had, or you can say this company, Rio Tinto, expects to sell more of its off-spec products like RTX and supplementary products 10. So for Rio Tinto, we are expecting the total volumes to be impacted for the rest of 2019 and 2020 Q1 before the production at Brockman 4 mines start. Now talking about BHP, which is another Australian major, it is also experiencing operational issues at one of their mining hubs. They have revised their mining plans for the Jimblever, resulting in Jimblever fines typical product specification for 2020 financial year of 59.5% Fe, which is down from the usual 61% Fe. So because of this revision, the company is able to maintain production at higher levels. So for BHP, we are expecting that they will have a strong Q4, and the company is now back on track to maintain a steady level of exports. Now, as I just mentioned that Brazil is also recovering from its supply issues, then as you can see in the map here, then the two important states of Brazil, that is the state of Pará and Minas Gerais, they produce iron ore a lot. But the increased supply in the second half of 2019 will come from the state of Pará and not Minas Gerais. To go into details, the state of Pará consists of Vale's northern systems, and it has two complexes, that is Carajás and S11D. We will witness increased production from S11D because it is ramping up production aggressively, and Carajás is already operating close to full capacity levels. As I just said, that there will not be much increase in production from the state of Minas Gerais, which consists of Vale's southern and southeastern system, because the Brucutu mines, which have an annual capacity of 30 million tons per year, have already started their production. And this is the region where we had the Vale Dam accident, so we will witness suspensions for many more years to come. Now, the question is iron ore, do we have a more balanced future? As you can see the chart here, the chart shows undersupplied and oversupplied market over the years. As we know that in 2019, the market is definitely undersupplied at the moment, but CRU expects this undersupplied market to make a transition from an undersupplied market right now to an oversupplied market through its forecast period, that is 2023. Looking at the cost curve on the right, we see that the current prices are above the 90th percentile of the cost curve, and hence we see an undersupplied market. This, just to tell you that this cost curve takes the cost of production and the price one gets paid for iron ore. If we look at the top of the curve, we see that the slope is very steep, which means that any small change in demand or supply will have a major impact on the prices of iron ore. And this is the region where we are at the moment. Consequently, high price volatility is expected for the rest of 2019. If we move down the cost curve, say around 80th percentile, then we see that the slope is not very steep but flat, and the volatility of the market will then vanish, which is not the case right now. So at current prices, almost all the iron ore producers in the world are profitable. That is, the margin of even the low-cost producers are extremely profitable. However, with weaker Chinese production and improving supply from Brazil and Australia, we're expecting iron ore prices to correct in 2020. So to sum up everything in just 3 points, if we measure the whole year, then the second half will definitely be better than the first half of 2019 because of supply issues becoming better from Vale, from the state of Pará and Minas Gerais as Brucutu mines have restarted. Australia's BHP shipments are back on track with improved shipments. Second, towards the medium term, we expect a big change from undersupply to oversupply. And third, market is still tight, and most producers are seeing good profitability, and we expect prices to come down the cost curve. Thank you.